Welcome traders to an outstanding episode of T2 SMC Trader. So in this video, you are going to learn about FOMO. What is FOMO? At the same time, you will learn how to overcome this FOMO and what is the result of mastering FOMO. If you watch until the end of this video, you will learn a lot about FOMO, and if you can be the master of this FOMO, this trading is gonna be very easier for you. So make sure that you watch until the end. Before starting this video, I would love to ask you to give me a thumbs up to this video to support this channel, and don't forget to subscribe if you are new. So let's go to the video. I would love to do some drawing things first. I'm not a good artist, so forgive me because of my shitty draw over here. Just think this is 15-minute chart, and you see market has taken some sell side liquidity over here from 15-minute chart. This is your sell side liquidity has taken. After taking the sell side liquidity, market went higher. Okay, so let me mark it. Okay. After taking the sell side liquidity, market went higher, made relatively equal highs. That is your buy side liquidity. This is your buy side liquidity. At the same time, it has made a fair value gap over here. This is a fair value gap. So you have already planned how to trade this specific price action, and you have decided that if market can come to this fair value gap, you will go to your 1-minute chart and you will start to look for a setup over there. That means market will make some sell side liquidity, take the sell side liquidity, market structure shift, fair value gap, boom. You have planned this is going to be your trade, but suddenly you have seen that market came until that area and it didn't reach to this area, okay, to this 15-minute fair value gap. Now you are in 1-minute chart. Suddenly you have seen that market has taken some sell side liquidity around that area, gave you the market structure shift, a very nice fair value gap. You are going to push your button over there because you are thinking that market is not going to that 15-minute fair value gap. Instead of that, it has made the setup over there, and now it is going for the buy side liquidity. So you pushed your button over there. That means you are just fear to missing that opportunity. If market goes to that buy side liquidity and take that buy side liquidity, I'm going to lose that trade. I'm over sure that market is going to take that buy side liquidity because that is too clean. Market has made a very nice setup over there, and you actually push your button over there because now you are fearing to miss that opportunity. So what you are actually missing? You waited for the first time that market will reach here to this 15-minute bullish fair value gap. Then you will go to your 1-minute chart and look for this setup from there. But now when you have seen that market has made this setup over there, because of your fear of missing opportunity, you pushed your button over there. So what actually happened in this type of situation? Market don't take the buy side liquidity. Instead of that, taking that buy side liquidity, market fall again, stop you out, come to this bullish fair value gap, made another setup over there, then boom, you are already a loser over there. You missed your, you have already take a loss. You are not going to believe that market is going over there because you got stopped out over here by a perfect setup around that area. At the same time, when market you see that market is not actually going to take that buy side liquidity. When market is actually reversed, you saw like market has taken the buy side liquidity, lower market structure shift, fair value gap, you take sell over there. When you are in a live market, trust me, it's really so difficult to focus everything, especially if you are new. So this is one kind of FOMO, which is actually missing of fear of missing opportunity to take entry. There is another kind of FOMO, and that is target profit FOMO. I will talk about that after explaining this FOMO. Okay, so after explaining this one, I will go to your target profit FOMO. So let's go to the chart and let's talk about this FOMO. So here is your 15-minute chart, and you can see this high and that high, they are relatively equal highs. I have just chosen a particular chart, as a hindsight, because I am making this video in Saturday. I can't give you the example through the live market, so I'm just using some hindsight point. Okay, so for example, this is your buy side liquidity, and you have seen that market went lower. It has taken all the liquidity around that area, so all of this liquidity has taken, all liquidity has taken over there. This is your liquidity taken. After taking this liquidity, market went higher, made this relatively equal highs, made this 15-minute bullish parallel gap. So what is your plan from your 1-minute chart? Now you are planning that market will reach to this 15-minute bullish parallel gap, then you will start to look for buy. Let's go to 1-minute chart now. Now we are in 1-minute chart. Okay. If you look closely around that 1-minute chart, this is that 15-minute buy side liquidity. Market started to fall. Okay, market has started to fall. Suddenly, you have seen this thing. Market has taken this lows or some kind of relatively equal lows around that area. That is your liquidity taken. After taking this liquidity, market has given you a market structure shift. So this is your market structure shift. After shifting the market, here is your fair value gap. That is called the entry fair value gap. And below this entry fair value gap, you have this breakaway gap. This is called our well-known setup. And 90% of the time, this setup worked perfectly. But here, you can see that market tapped to this entry fair value gap. Very immediate reaction, started to go high. Then boom, market fall. You are thinking that market is not going over here after seeing this setup. When you have seen this setup have created over there, you started to think, no, market is not going to that bullish parallel gap. Instead of that, it is going to take that buy side liquidity. So you are fearing to miss that opportunity. So you pushed your button around that area. Don't tell me lie. I did this in my life a lot of times, and it happens actually because of that fear. If we miss that, what is going to happen? Then suddenly you saw market went higher. You are in this trade. You are very happy because market is going toward your buy side liquidity. And then boom, market went lower. Retest, boom, you got stopped out. Maybe your stop loss was over there. Let me mark it one more time. So maybe you took this entry over there and this is your stop loss. Maybe you have targeted until that area. And suddenly you got stopped out over there. When you get stopped out over there, what you start to think, no, it's not going higher actually. You forget about this 15-minute bullish parallel gap because you saw that a perfect setup over there, a very nice setup that is near about 90% of the time it worked perfectly. So what you are going to think that no, market is not going higher anymore, it is actually going to fall. So you are seeing this as your market structure shift. So over here, this is your market structure shift. This is your fair value gap. So what you are going to do actually, you are going to take a sell around that area. Lot of time it happens, brother. It's called the reverse trade. That's a very immediate reaction. You maybe put your stop loss over there and you have targeted some kind of relative equal loss or maybe the last fair value gap around that area. What happened? Market went lower, stopped you out again. 2 loss in a row. This is the result of the FOMO. Now, how to overcome this FOMO? If you have marked this 15-minute fair value gap from your 15-minute chart already, mark that buy side liquidity over there, you have to tell yourself two things. First, if market give me the price I'm expecting, I'm gonna participate in this price action. If it doesn't give me the price I'm expecting, I'm gonna let it go. Even if market make the setup over there and take that buy side liquidity from there, I'm not going to participate in that run because market didn't reach until that 15-minute bullish fair value gap. From my 15-minute chart, I have seen that market should come to this 15-minute bullish fair value gap, then market should take that buy side liquidity. I'm not going to touch this market until that area. When market will reach here, then I will start to look for the setup. Otherwise, I will let it go. If market take that buy side liquidity from there, I don't care. I'm not going to take that entry from that specific random area. If you can do this, trust me, brother, you are not gonna lose. You are not gonna face the FOMO almost every time. The only problem of our trading is when we see the setup and we are oversure that something is going to happen, then we don't wait for the perfect time. If you don't know how to wait for the perfect time, come to my live every day. I'm explaining this every single of the day, okay, in my live streaming. I'm showing you how to avoid this big run. See, that's a very nice big run. I'm showing every single day how to avoid those and strict with your plan. If you can be strict with your plan, you are never going to be facing the FOMO again. Okay, trust me, brother. At the middle of this video, I would love to remind you one more time. Please don't forget to give me the thumbs up and don't forget to subscribe to my channel. At the same time, in the description link, you will get some affiliate link. So if any of you would love to give some, uh, you know, some, how to say, I don't know. There is some affiliate link of the prop firm. So if you push the link over there and buy the Eval account, depending on, through that link, I'm gonna get some affiliation money from there. It's gonna be appreciated. Okay, so I messed up over there, that area, but I hope that you will understand. That's why I told always wait for the perfect price action. Then what happened actually? Market went higher, made some relatively equal highs, went lower. Where did it reach? To that specific 15-minute fair value gap, bullish fair value gap. It came to this specific bullish fair value gap for the first time over here. Now you will start to look for your market structure shift. If you get your market structure shift now, you will participate in this price action. If you don't get it, you will do nothing. You will just let this go. What do you see? Market came here for the first time, went little higher, tapped to this fair value gap, went lower again, take this liquidity, then market went higher and gave you the market structure shift. After getting the market structure shift over here, then price went higher. Now let me explain this thing little bit. Over here, this is your market structure shift. I'm just marking it randomly. It's not important to show the exact things over there, but whatever. And where is your fair value gap? There is your fair value gap around that area. You will push your button around that area. So that will be your entry point over there. Let me mark it. You will maybe cover this low as your stop loss and you will target this one. What happened? Risk to reward ratio, it's near about 1:3, 55 handle, perfect. Market went higher one more time, went lower, then boom. This is how you can overcome the FOMO, and it is called the entry FOMO. That means fear of missing entry opportunity. There is another FOMO which is called fear of missing the target. I will talk about that now. But before that, I really would love to ask you, don't you feel like this way when you see this setup over there? Don't you push your button over there? If you push your button, then you are actually facing the FOMO. And if you're facing the FOMO, you have to overcome that. If you can overcome this FOMO, the way I explained, to wait until some kind of price action. What is your planning price action? So you have planned that price action beforehand. When you will wait for that, you will be able to overcome this entry FOMO. You have to practice this. Okay, after watching this video, if you just let it go, it's not going to help you. So please make sure that you are practicing this, how to wait and how to avoid this opposite run when the opposite run is happening over there. How to avoid that. If you can practice this, trust me, you will be the master of this FOMO. And if you can be the master of this FOMO, you will easily avoid this losing trade. Then you won't do the revenge trade. At the end of the day, you will get the winning trade. That doesn't mean you are going to get 100% of your winning trade, but at least 90% of your trade will be the winning trade. Don't frame your trade from a random level. First plan your trade beforehand, then wait for the price action, finally push your button. Just come and join to my live. I'm explaining this every single day. So this is the first part of entry FOMO. Now I would love to talk about the target profit FOMO. What is that? So after the entry FOMO, I would love to explain the target profit FOMO. What is target profit FOMO? Fear of missing opportunity, obviously FOMO means. And what is target profit FOMO? So this is your buy side liquidity and you have waited perfectly to price reach until that area. You have been mastered of the entry FOMO. Now you are working with your target profit FOMO. Price came here, you have been weighted over there, and now you are in 1 minute chart, and you saw that market has given you a market structure shift after taking liquidity, fair value gap trade entry. Then boom, market rest until that buy side liquidity. So you have taken your entry to that fair value gap and that area, and you targeted over there. Okay, so let me mark the setup. Actually, it has taken this sell side liquidity around that area. This your sell side liquidity has taken. Then this is your market structure shift around that area, and here is your fair value gap. So you took your entry from 1 minute chart from that specific fair value gap, and you hold it until that area. But what happened actually? Most of the time you will see price do this, reach until a certain level, then go, and then boom. You are feared that you have taken that entry by depending all the price action, all the plan. But now it's not going to get your target. Instead of that, it's coming lower. So what you do in this type of situation? In this type of situation, sometimes you put your stop loss higher to the break even, or sometimes you actually close your trade when you have seen this run is coming toward your stop loss. You actually close this trade because you are not believing your setup. This is called target profit FOMO. You are fearing that market is not going to hit your target profit. This is another type of FOMO. It's really and extremely dangerous because you will close your trade prematurely. You can't do that. So how to overcome this FOMO? There is two type of opportunity to overcome this FOMO. First, don't target the 15-minute liquidity. Don't target the extreme liquidity. Instead of that, try to target some 1 minute liquidity. So below this 15-minute liquidity, there is some, for example, there is some kind of buy side liquidity from 1 minute chart. So target that 1 minute buy side liquidity. I always tell that to my live that never ever target that extreme on. Instead of that, try to find some 1 minute liquidity. If you target over there that 1 minute liquidity, at the same time find some partial area. It can be some relatively equal highs below your 1 minute liquidity, or it can be the last fair value gap from 1 minute chart. So most of the time I actually take the partial around the last fair value gap, but if I see below the 1 minute liquidity there is some kind of relatively equal highs, I also take the partial over there. So always try to make sure that wherever is your extreme target from your 1 minute liquidity, there is a partial area. If you don't see any partial area and you have only this 1 minute liquidity, then you can target, and obviously that should be very near. That 1 minute buy side liquidity and the 15-minute extreme buy side liquidity should be very near. In that type of situation, target over there, take the partial over here. Don't forget to get the partial. Partial always pay. After taking the partial, put your stop loss to the break even. That means if after giving you the partial market reverse and stop you out, you are still profitable. This is how you can overcome this FOMO. Okay, let me go to the chart. It will be clear over there. It will be much more clear over there. So I'm in that same trade which I have applied for the entry FOMO. Now I'm gonna talk about the target profit FOMO. Okay, I'm going to remove this one. So over here you have seen that this was your setup. So you have taken that entry around that area to that area. So you are not going to target this extreme liquidity from 15 minute chart. Instead of that, you are going to target some kind of buy side liquidity from 1 minute chart. So you can see this high and that high, they're relatively equal highs. Either way, this is your buy side liquidity. Okay, so this is gonna be your buy side liquidity. You have taken your entry to that area. Maybe your stop loss is over here. You are not going to target here. Instead of that, you are going to target over there. When you have targeted over there, try to take some partial to the last fair value gap from 1 minute chart. So you can see this is the last fair value gap from 1 minute chart. Okay, so let me mark this one around that area. You will take a partial over here. then you will put a stop loss to the break even after taking that partial. After taking that partial, you will put a stop loss to the break even. This is how you will be able to hold your trade until the liquidity, because you know that I'm already profitable. Here I have already taken the partial, I'm already profitable, and my stop loss is at the break even. Even if I get stopped out, I'm gonna be profitable trader. Look what happened over there. Market reached until that last fair value gap, then it started to fall. Trust me, when you are in this trade and you are seeing that after this very nice run, market just started to fall, you will be very fear. I mean, you'll be afraid of seeing this lower run. Is it going to stop me out now? Is it going to reverse now? So this FOMO is extremely dangerous, because of this FOMO, lot of our good entry, we don't wait to close it around the level we were expecting. We were expecting to close that trade around the buy side liquidity, but because of our target profit FOMO, we don't close it around that area. Instead of that, we closed it prematurely, and later when we see this run, we get angry and we start to do over trade. This happened, okay? This happened to me. I believe that most of you are also facing this same problem. So the way you will avoid this target profit FOMO, this is the only way: to take the partial. Never target the extreme liquidity. Here, if you see this buy side liquidity and that buy side liquidity, they're very near. If you have the possibility to take the partial over there, take the partial over here, then hold the trade until that area. If you have another opportunity to take partial, take the partial when it will go above this buy side liquidity. If you don't have it, then trail your stop loss. Just trail your stop loss with logic. Then I believe that you will be able to get more profit from that market. But my advice is not to target the extreme liquidity. Instead of that, try to target some liquidity from 1 minute chart, and obviously make sure that you have taken a partial, either relatively equal highs from 1 minute chart or from the last fair value gap. If you take a partial from that last fair value gap to that specific entry, you see 26 handle. It's not small, brother. 26 handle is huge. Trust me, it's huge. By taking that partial, you have confirmed your profitability by that specific entry. Now, if you get stopped out to the break even, you don't care. But if you don't get the profit already, you'll be very afraid. If it reversed, what is going to happen? Am I going to take the loss? So in that type of situation, you are not able to put your stop loss to the break even, because you didn't have any profit yet. You will put it over there. Maybe you will be very afraid, okay, market is actually going to stop you out, so you will close your trade over there. You closed it prematurely. A lot of things actually happen. So this is how you can overcome this target profit FOMO. Now, after listening this video, if you don't practice this, if you don't use this information in your trading, you are going to forget this. It's not going to help you. So you have to practice this. First, you have to wait to let some run go. No, I'm not gonna participate in this run. I'm not gonna frame my trade from there. I'm waiting. I'm just waiting. A lot of people will tell you trading is the game of patience. How to be patient? This is how you should patient. First, you have to make a plan from your high time frame. Then from your lower time frame, you have to wait to execute a trade or entry by your plan. You have to wait to reach some certain level. You have to avoid those opposite run. What happened if it keep going lower? If you're if you are looking for buy, but you are seeing that market went through this fair value gap and it is keep going lower, what you are going to do in that type of situation? You'll just simply let it go, because it didn't work with your plan. You will just let today go, maybe this session go, until you see something according to your plan. You are not going to trade, you are not going to take entry around that area. If you don't work this FOMO, trust me, brother, it's gonna be really difficult for you to be a profitable trader. If you frame your trade from some random level, you're gonna be you are going to hurt yourself a lot of time, and it's really so bad. This is why most of the traders are not profitable. The logic I have explained over there, please practice them. If you can be the master of this FOMO, you know the result. what is going to be the result of mastering FOMO? You will get more profit. You'll be able to avoid more losing trade. You will know how to be a professional trader. This is how you have to be a professional trader. Again guys, I'm trying to come live every single day to make sure that you are getting this all of this point. And if you really find this out helpful, don't forget to subscribe to my channel, obviously if you are new, and don't forget to give me a thumbs up. Okay, your likes inspire me to make more videos, more informational video. And please do that, it's free of cost. So that's all for today. I hope that it's insightful for all of you. If it's good and if I get response, I will make another video about this psychology, not about FOMO. That's gonna be another topics. It's a suspense right now. But if I get a response from this video a lot, then I will make another one. I hope that day by day you will improve and you will be the wizard of this market. I'm the wizard of this market. You will be the wizard of this market. We will break this market all together. So until the next video, cheers.